European energy markets are likely to push lower at the start of this week before potentially bouncing off the well-established support ranges. Hello everyone, my name is Marcello Colax. I am the Managing Director at Clever Markets, and today I'm going to walk you through the European energy charts. Today's focus will be on multi-time frame analysis because we are getting some really interesting targets on the hourly charts that can be very important for a lot of the daily charts. As always, we have to start with a disclaimer. So everything you see here, of course, is not trading advice. It is just my humble opinion. Our Clever Markets dashboard this morning is showing bearish dominance for the TTF and NBP markets on the hourly chart, whereas German Power is rather neutral and EUAs just switched from neutral to bullish. So overall, you can see there is nothing really happening on the daily charts all across the markets. We are in our firmly established sideways ranges. We do expect a weak open this morning, but there is the opportunity to bounce. EUAs are the only markets that are a little bit further in this process. And as always, we are also trying to derive some insights from our TTF sentiment poll. So every single week I'm asking my LinkedIn network where they think the TTF is going to go for the week ahead. Usually we get around 150, 200, 250 responses every single week. So this is the longest running and biggest TTF sentiment survey in the energy industry. We've been doing this for more than 2 years by now. And we see that the bears are still dominating, hovering around the 40%. So it hasn't really changed all that much week on week. The bullish and the sideways sentiment also nearly unchanged week on week in the grand scheme of things. And we have actually derived a proprietary sentiment tool from this data. So this is how we like to read it. In a trending market, so if it's just going up or down, traders tend to vote in line with last week's closing price. Even though we are asking our traders where they think the market is most likely to go, a lot of the time traders are simply voting in alignment with last week's close. So if last week, week on week, we had a bullish close, then traders are more inclined to vote bullish for the week ahead. So in a trending market, not so useful. However, in a mean reverting market, so when we are going sideways, then we can use this tool as a contrarian indicator. Right now, a lot of European energy markets are at the lower end of a range market. So bearish dominance could mean that the market will most likely revert higher in line with a contrarian inclination. So usually we want to see more than 50% of market dominance, so more than 50% bulls or more than 50% bears, before we can say that the market is strongly committed into one direction. 40%, not so much. So what does this mean for the market and the classic technical analysis that we are trying to do here? So let's have a look at our charts. This is an overview with the TTF and NBP front month, TTF and NBP front season, German Power, EUAs, no, the other way around, EUAs, German Power, Henry Hub and Brent. And you can see like most of these markets, they are firmly within their sideways ranges. Now here's the thing, with marginally bearishness on the sentiment poll, it's not that strong, and our tools are telling us that we are more likely to start with a weaker open, and from there, once we have found the support area for a lot of these markets, then we are most likely to bounce higher. So this would be then in line with the market being a little bit overstretched as seen in the sentiment poll. All right, let's have a look at the TTF front month first. So here we are neutral on the weekly and daily chart, and we are bearish on the hourly chart. So I think there's not much to be said about the weekly chart. You can see the market really isn't going anywhere. The bears had a good run until mid-April. We did get a bounce, and since then nothing has happened for 1, 2, 3, 4, 5, 6 weeks, and essentially all these gains that were made earlier were undone within just 1 week. So the market is firmly assessed as neutral on the TTF front month weekly chart. So on the daily chart, we are confronted with this. So you can see we have been gradually ticking lower. We are approaching the lower end of this rectangle. I don't think it's a question mark anymore. We're quite kind of firm that this is a pretty neat rectangle that we are working with here. So in a sideways range, we try to avoid trend and momentum tools because they tend to flatline. which is also alignment with standard practices. So here we do have the Clever Markets playbook, and on page 43 we start talking about building a methodology for physical traders, but no worries, we have a spec trader section as well. It's more or less the same. So you can see here what to do in a sideways trend, which perfectly illustrates that trend and momentum tools trend to flatline in a sideways market. Let's say there's the daily chart, and oscillators, which are usually good for these sideways ranges, they only give us like really shallow signals. Now, however, so what do we do? How do we trade this? Because we can't just sit on our hands for 3 weeks, right? So what we do instead is we start zooming into the lower level time frame. So in our case, it would be the hourly chart, because there we do get better swings, maybe even for the trend and momentum tools, but more importantly for the oscillators that can actually be traded. So let's have a look at exactly that. So the market has been pushing lower, the TTF front month on the daily chart. Here, this is already like a too tight of a range because now we are hoping that, oh, I hope the next candle is going to be red as well. So I really, and then I hope the next candle is green so we can actually bounce, right? So if you ever find yourself hoping that the next candle will turn out a certain color, I promise you, you are in a too high of a time frame. Let's do this instead. So we are now on the hourly chart, and you can see how we are dealing with these swings. Isn't this much easier on the eye? No more guessing. So right now we are in the down leg on this hourly chart. We are probably heading towards the head and shoulders pattern target that was resolved near 31.59. So what am I talking about? So last week, you might remember, we have identified this head and shoulders pattern. It was triggered with the move below 33.52, which is the neckline, and we are now established. We are now working with the established target at 31.59. So once we reach the target, probably a bounce as expected from the daily chart. But isn't this so much neater? Also, we are now seeing that the head and shoulders target on the hourly chart somewhat aligns with the range support on the daily chart. So this is called multi-time frame analysis. If multiple targets do align on many time frames, then we know that most traders, or a lot of traders, are looking at it. It's anniversary time, so Clever Markets has now completed its second year in business, and I just want to say thank you very much, everyone. This would not have been possible without you. To all the clients who believed in Clever Markets, and also back then in me personally, from the very first day, thank you so much. You're truly awesome. For everyone who's joining just now, you are fueling the growth of the company, and I'm super excited to have all of you. To my LinkedIn community that has grown significantly over the past 2 years from 400 to 9,000. I try to actually talk to every single one of you, so thank you very much. You're all awesome. Clever Markets is truly an evolution in technical analysis for the European energy markets. So thank you very much, and I really mean it. It comes from the heart. Everyone, thank you so much for tuning in this week. You've all been amazing. See you around. Thank you very much, and bye-bye.